Hey everyone, I'm Stephen Kalayjian and welcome to Back to the Futures. I'm here every Tuesday and Thursday at 1:30 to 2. And wow, what a day we're having here right now. We have the S&P futures down 75. Again, the threat of war here between Iran and Israel. Iran sending missiles right now, currently in the last 15 minutes, and it's not looking good. So oil is up over 5%. S&Ps now have just rallied. I was just about to call along on the buy divergence here on the S&Ps. And there were some really great phenomenal patterns here that I love to show you. And it's just remarkable how these patterns just tend to repeat themselves. And, I've told you since the beginning of the show, since I started to Back to the Futures, that my research has shown me that whenever you're using the continuous contract, the S&P futures, that you need to look at the underlying ETFs. And that's really, really the focal point here. So today we had the big push down. Okay, S&Ps just rallied here north of 10. Here just now, 12, 13, 15. Wow, looks like something just might have come out. Bonds just got hit. Gold just dropped. S&Ps just launched here. And again, this is a great market to trade. We want volatility as traders, right? We had some really great patterns. I was just about to say, look to buy the S&Ps here between the 33 and 38. They just ran to 50, 50 and a half here just now. Coinbase, a lot of these stocks making new lows, but the MACD is non-confirmation. Let me just show you here. You can see here today on the S&P futures, this is the 30-minute. Let me look at the 5-minute. This was the low here. The low here was the 36 and a half, I believe, 35 and a half, and we just got down to 37 and a half. And you can see if I draw my horizontal line right here, you can see on the horizontal line we were close to making new lows, but these MACDs did not confirm. Even here, when we made the new lows here, I called this long, because the MACDs did not confirm on the 5-minute time frame. Very powerful patterns. Let me show you the pattern of the day. So after we got the big sell reversals, okay, on the 15-minute time frames, and remember I told you I do combination methodology. So when the 60-minute time frames reverse to sell, correlating with its 30, correlating with its 15, right? Then the next thing you do is you look for a buy divergence, which we caught, and then around about 12 o'clock, 12:15, 12:30, I literally said I would be looking to short the entire world. S&Ps were trading around the 68 level. NASDAQ futures about the 19,000, about 65, 70. And I literally walked out because I knew this pattern was going to be phenomenal. It was the first bounce on the 15-minute time frame after the 60 and 30-minute time frames reversed. Let me show you a great pattern here today on the 5-minute. So here we have it right here. We had the reversal price right here, and this was the first bounce on the 5-minute time frame at exactly around 1040 right here, and it was a beautiful pattern. Again, the 15-minute time frames reversed to sell. The 30 and 60-minute time frames reversed to sell. So you look to short the first bounce on the 5-minute time frame. It dropped from 61 3/4 all the way down to 35 and a half, 36 and a half range. And then we got the buy divergence right here. You're making new lows, non-confirmation, okay, on the low of this MACD. They rallied from 36 up to 30, 68, 69. They ran 30 some odd handles, 31, 32 handles on the S&P. And exactly the point that I'm trying to say is that when you get these patterns like this, okay, when you get these patterns like this, they are phenomenal patterns. And then the trade of the day was the 15-minute time frame setting up. I said the 15s are getting overbought, and on the S&Ps, on the spiders, on the entire world. And I said after the 60-minute time frame reversed to sell, correlating with the 30, correlating with the 15, the pattern of the day is going to be the 15-minute time frame. And boy, oh boy, was it ever. The spiders pushed up here right around here. Here's the push up on the 15. Now the 15 reversed to buy, but it doesn't make a difference because the 30 and 60 are in sell mode. So you went from a trend, which is the 15, 30, and 60-minute time frame in sell mode, to the 15 reversing to buy, which means you have what's called a disconnect. Remember, I look based upon the three time frames: the 15, the 30, and the 60-minute time frame. So with that being said, what's really truly important is to understand the buy reversals and understand how, when the markets pretty much get these buy reversals, we should hold the lows for the day right there. But with that being said, when you see the push down, the correlation, yesterday we saw the S&Ps rally at the end of the day from 57, I think 83 up to 58.10, right? They ran some 27 handles like that at the end of the day. And a young man called me last night and said, what did I do wrong? And I said, well, I got the buy reversal on the spiders that correlated on the 15-minute time frame with the continuous contract. I said, I would have waited for the pullback. He said, oh, you know what? I never looked at the spiders. And I said, well, I've been preaching since the beginning of time that when you trade during the U.S. session, you need to look at the underlying ETF. You need to look at the spiders. You need to understand the importance of the market. You cannot just trade based upon my research, just looking at the continuous contract, whether it's bonds, gold, S&P, NASDAQ futures, Dow futures, Russell futures. It doesn't make a difference, right? You need to look at the underlying ETF when you're trading the S&P futures. The S&P futures, the calculation on the continuous contract is 23 hours in a day, and the underlying ETF is at 6.5 hours in a day. So very important, very, very important to see that and to really fully understand the importance of, when you're trading the market, to understand the correlations that you need to have. The math is different on the spiders. I do not look at the pre and or post market data. I only look at the spiders from 9:30 to 4. And when they align, you better be going in that direction. And correlation studies in trading futures, I truly believe, will change your life. Will change your life. Okay, it's really important. It's really important to understand that when you're trading the markets, right, to wait for the right pattern, wait for the right condition. My research has shown me trading the stocks or ETFs will get 4 to 6 great patterns in a day. If you're trading the continuous contract, you're looking at anywhere between 12 and 18 great patterns in a day. Again, more data, more patterns to see on the continuous contract. But again, it's up to you. Once you hit your goal, to be consistent and to be able to acknowledge the fact that when you're trading the markets, you need to use multiple time frames based on my research. But more importantly, what you want to be able to do is to be able to have them side by side, as I do, and I can see everything. I can see everything, whether it's the Qs and the NASDAQ futures, whether it's just the diamonds with the YMs, whether it's the RTYs with the Russell IWMs, 30-year bonds with the TLT 20-year, or gold with the GLDs, or oil with the USOs. Very important to see this, very important to understand the importance of trading using multiple time frames and then doing the correlations with the underlying ETFs. If anybody has any questions, feel free. You know, this half hour flies right by. If anybody needs to contact me or text me or call me at 914-500-7484. So when I decided that I was going to go get something to eat today, and I was kind of hungry, and I said, I'm going to go get a smoothie. And I said, here's what I would do. I would short the S&Ps between the 68 to 74 range, 68 to 75 range, or 69 to 76 range. This was set up the 15-minute time frame. I did not even flinch based upon the fact that the 60-minute time frame reversed to sell, correlating with the 30, correlating with the 15. when the 15-minute time frame reversed to buy on indicator 4 using my software, I knew that push up on the 15 was a major, major sell signal. Why? The MACDs on the 60 and the 30-minute time frames were negative. They were negative MACDs. They look something like this right here, blue over yellow. And if you can master the art of technical analysis using the multiple time frames, using multiple indicators, I firmly believe it will change your life. Okay? Now, it is important to ask questions. It's important to learn. Trading futures gives you the utmost ability for leverage. You don't have to worry about the PDT rule. And better tax consequences. I believe it's on the first 60,000, you get taxed at 15% long-term capital gains, and then anything after that is short-term capital gains, right? The next $60,000 and $1 up that you make. So again, trading futures has so many advantages, and not only can you go from paper trading to micros and to the big contract, you have the ability, to trade the micros, to get acclimated, to be able to understand how to scale into a position and scale out of a position. So whenever I look at the market, I do a range. I look to buy or sell short or in a range. My trades normally last, the trade ideas normally last anywhere from 1 bar to 8 bars. So whether it's a 3-minute time frame up to 1 minute to 24 minutes, or if it's a 5-minute time frame, 1 minute to 40 minutes, and if it's a 15-minute time frame, 1 bar, 15 minutes, all the way up to 2 hours. Very important, very, very important. Okay, I've taught this to some of the top hedge fund managers in the world, and what's really unique about this is if you just wait patiently for the patterns to set up, I believe you'll be very well rewarded. With that being said, if trading the markets, the futures markets, to me, are the greatest ever, whether it's, again, the index futures, the commodity futures, and or the financial futures like the 30-year bond. Very, very important. Being able to master the art of divergences is, if you can master the art of divergences, you've mastered the art of trading. Remember, I told you I have 5 conditions in the market, all predicated on my indicator 4, and using the indicator 4 on the multiple time frames. You can have a trend, you can have a buy reversal, you can have a sell reversal, you can have a correlation, and you can have what's called a disconnect. Right now, the S&Ps and the indexes are in a disconnect mode right now. Okay. Now, with that being said, okay, of the 5 conditions, each condition you can have a buy and a sell divergence. So you have 5 conditions and you have 10 strategies, 2 strategies for each of the conditions. Okay. Does anybody have any questions here at all? Anybody? Okay. All right. Tesla was a nice long there. I'm just looking at the market here, the futures markets right now. S&P futures just rallied about 18 just now. NASDAQ futures just rallied about 80, 85, 90. Oil just dropped off the highs about $1. So I guess, the Iron Dome is protecting Israel. Some missiles got through, but it wasn't such a gigantic attack that, so I think the market is kind of relieved on that regard from what Iran has done, meaning, we pray nobody has lost their lives here for this foolish act of war. And what's right now, so the market, I guess, just rallied off of that because I guess that it was, not as significant as the markets had thought from the sell-off, right? But we'll see. It's still early. We have about 2 hours and 15 minutes to go here. The S&P futures were trading at the time before we came on. I was just about to call long on that, believe it or not. The S&Ps were trading at the 35 and a quarter, 35 and 3/4. So the low was 33. So we just ran just now here 20 handles on the S&P. A lot of stocks rallied sharply, about $2 and $3 just now, and they're still going. Okay, so again, the markets right now are Gold is off the highs. Oil's off well off $1 off the highs. Okay, oil making new highs, non-confirmation in oil on the new high at the 120 level on oil. New high and non-confirmation hit the high of about 71.70, and the MACDs on the 5-minute time frame cannot confirm on crude oil. A lot of you who are trading oil today has been a beast. A lot of great patterns today. S&Ps are still going. So right now the market feels like, okay, all right, so they sent missiles. That's it. The Iron Dome caught 97, 98% of them. Hopefully there's no casualties, and I guess the market's relieved that it didn't escalate any further or any bigger type of weaponry that was sent over. Again, volatility is what we all want as traders, especially in index futures, right? And you get it, you got it, right? So again, it's important that we remain consistent, that we know the right patterns. I spent nearly 10 years of my life building this software, and I'm able to identify, and these charts are available on TradingView, and it's really important that I express this, that based upon my opinion, is that how these patterns repeat themselves over and over again. Again, when I got the sell reversal on indicator 4 on my 60-minute time frame, it correlated with the 30 and the 15, and then this was the first bounce right here, like I said, around the 12 o'clock, 12:15 time period. S&Ps were trading 68.5, 69, I believe, and they never looked back. I'll give you the exact high, if I'm not mistaken. It was 69.75. I actually walked out of the room and I said, here's your stop. I'm going out. I think they're going to drop big. And when I got back, the S&Ps literally dropped all the way down to the 39 level. So they dropped 30 handles in 15. So in about 40 minutes, again, within 8 bars on the 5-minute time frame, the S&Ps hit 69.75, okay, all the way down to 57.39. So again, it fit my rule, 1 to 8 bars. And if you're short the S&Ps or the Nasdaq futures off that 15-minute time frame, then the most important thing is you just do what? You scale into the short, you have your stop in place, you see it start to drop, you start lowering your stop. If you're short the average price of 69, to say 69, 69.25, it drops to 65, depending on how many contracts you're short. If you sold one, you cover, maybe, but you wait for the pattern on the 15, maybe just lower your stop to 69, it drops to 63, you can cover, you make it $350, about about $300. And then if it drops to 60, you made 450. Just keep lowering your stop. Now, if you sold more than one contract, you sold maybe 2 or 3, or maybe you sold 5 micros, maybe you cover one, you lower your stop, it drops another 5, you lower your stop, and you just keep lowering your stop, okay? And look what would happen in 40 minutes. You got a move of 30 handles on the S&P futures. Let's say, for example, just now on the double red short, you sold the S&Ps here, okay, at the 57 handle, and now it's down to 53, and you cover at 53 on one contract. Well, you made $20 on a micro, less fees, and you made just now you made yourself $200 on the E-minis here. Okay, now it's important to recognize and understand that using the multiple time frames are very, very important. Okay, and again, using the 15, the 30, and the 60-minute time frame, I can't stress how important it is and how to use my indicators. Everything I do is predicated on combination theories. S&P's down 5 just now. And what I mean by that is when you do combination theories, what you're doing is it's not only just the multiple time frames, it's also using the indicators, right? So when you're looking at the indicators lag, price leads, indicators lag, but the indicators help me identify the pattern. Indicators 1, 2, 3, 4 help me identify the patterns. 85% of the time, I'll use indicators 1, 3, and 4. 15% of the time, I'll use indicators 1, 2, 3, and 4. Okay. Does anybody have any questions at all? Okay. It's really great to be here at Tradier Hub. Back to the futures. I love the name. To me, the futures market is very, in my opinion, I think it's the best market to trade. Yes, I traded significant amount of shares in my life, nearly 2 billion shares in my life, but I really felt that the futures markets for me were it. Okay. And again, it's important to always maintain stop orders. Okay. And no one's bigger than the market. I can't tell you how many stories I've heard in my life, how people do not use stop orders. And I say to them, well, do you get in a car and not apply a brake when you go out yourself or your family? They're like, no, then you should have a brake or a stop order in. Now, a lot of people understand that there's a different type of stop orders. There's a stop limit and a stop market. The stop limit in a fast market will go right through. If you don't get filled on the limit, as it gets triggered, it becomes an offer, and a buy stop would mean also if it blows up through the limit, your price on a buy stop limit becomes a bid. If it's a sell market, the minute it touches the next print, you should be filled. Okay. If it's a buy stop and you're short, or you want to just go long at a certain number, and let's say your number is 55, the minute it hits 55, either you buy 55s, 55 and a quarters, or if it's running, the next print up, but at least you're covered. It's a market, it becomes a market order. Okay. All right. 30-year bonds just dropped about a half a point just now. That's pretty significant. Bonds were up pretty hard here. All right. Does anybody have any questions? We have 8 minutes to go. Okay. Again, learning futures is something I teach people all around the world. I love it. I get phone calls from people all over that want to learn futures, whether it's they're options traders and want to learn futures. Some people are just beginners and want to learn how to trade futures. Or you have people who are equity traders and they want to learn futures. Whatever combination it is, it doesn't make a difference to me. I love to teach. I love to guide. I love to explain and teach futures trading. Okay. With me, there are 5 key steps: learning my charts, my indicators 1, 2, 3, 4, learning the numbers to the right, which are important on the chart overlay, learning my terminology, learning the strategies, and then learning how to scale in and scale out of a trade. Today, someone said to me, Steve, I think I stay in the trades too long. They go from big gains to breaking even or slightly losing. I'm like, well, wait a minute. So if you have a 5 handle or 7 handle profit on the S&Ps or whatever, maybe the NASDAQ, maybe 10 to 20 points on the NASDAQ, why wouldn't you then just raise your stop? Why wouldn't you just raise your stop? Okay. And what happened was he said, you're right. I never thought of that. I'm like, okay, well, I'm glad I can help you. But again, the most important thing is to recognize, right? When you're trading the markets, okay, when you're trading the markets, you want to be able to identify the pattern and then trade it. Today we caught a great long off the lows. Okay, I didn't even flinch on that, and they started rallying. I just said, just keep raising. I would just keep raising your stop. I keep raising your stop. Keep raising your stop. S&Ps went from the 33 level, and the next thing you know, in 20 minutes they went up to 55. That's 22. Now that's a monster move, right? 22 points on the S&P. I said, just keep raising your stop. Raise it to 51, 52. The next push up was 57, 58. Pulled in to 57, then pushed up to 60. Pulled in a little bit, then went up to 65, 66, 67, 68. Okay. So again, it really is up to you to understand how the markets trade, to be able to be consistent. Look at the S&Ps. They just ran 20 handles, 21 handles, actually about 35 and 3. They just ran 25 handles here. Very important. Very, very important here. And the one thing I will tell you in trading the markets is that when you're trading, you want to be able to just hit your goal every single day, and then from there, you want to be able to be consistent, watch the markets, and then from there, you want to be able to then just trade the market in such a way that you hit your goal and then increase your goals. Increase your goals, okay? I increase your goals every single day. You didn't hear me call one short here. S&Ps just went from 30, look at them go, 30 handles here. Look at all the stocks rallying. You had an MSTR rally 5. Coinbase just rallied 4. S&Ps just rallied from 30, 35. S&Ps just, spiders just ran $3 here. Literally, I was just about to call the long on that buy divergence here. So again, the markets got freaked out because of the threat from Iran. It looks like it's the same old nonsense. They send 5,000 missiles. The Iron Dome caught 97% of them. And really, we just pray that no lives were lost here, okay? That no lives were lost. It's important to know that now, okay, you're looking at the markets. We just rallied off the lows here. We're still down 50 points on the S&P. I'm not calling for a big buy reversal here. What you're looking here now is probably some type of a short. I probably look to short these S&Ps here between a 64.5 and 70.5 range. NASDAQ futures probably around the 85 to the 85 to 15 level here. And now what you're looking for here is now a pullback on the 5-minute time frame. I think the lows are in for the day. Okay. So especially when the spiders reversed to buy, the diamonds got the buy reversal. And now I think we're going to get some type of a pullback here. So if you're short the S&Ps, I would be looking for a pullback in the next anywhere from 5 to 15 minutes here. S&Ps, if you're short, I'd look to cover 60, probably 61 to 64 here. So let's just say you sold 64.5, 65.5, and now it's trading 64, 63, 62. What you wanted to be able to do is you want to be able to lower your stops here. Look at this, unbelievable. 30 handles on the S&P, 30 handles. I knew they were going to go. I knew once Iran started ripping and the Iron Dome was kicking in, I just felt that the penetration wasn't going to be significant. Again, we pray that no loss of life has been here. S&Ps, I look to cover 61.5 to 64.5 range. All right, really great pattern. Again, making new lows. Well, we were about to make new lows, but here's the thing, right? I was looking at stocks like Microsoft. I was looking at stocks like Tesla. I was looking at stocks like Amazon, and they were not making new lows here, right? And even when the NASDAQ, the S&Ps were about 2 handles away from making new lows, the market did not, the S&Ps did not make new lows. And you had that buy divergence, okay? S&Ps are starting to drop here. Again, now we're starting to cover or lower your stops. Scaling in and scaling out of a trade is very important. For those of you who need to have any questions, please contact me at 914-500-7484. Have a great day, everybody. God bless you all. I'll see you here Thursday at 1:30 and Back to the Futures. Remember, be consistent. Have a great day, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.